Despite a downward correction, the US dollar remains at elevated levels. Global investors need a shelter for their savings, and the US dollar justifies its status of a safe haven asset, even amid massive injection of the dollar liquidity into financial markets by the Federal Reserve. Stock markets remain in the tailspin. The International Monetary Fund predicts that global GDP could contract to a greater extent this year than during the crisis of 2008. The reason for recession is obvious: the coronavirus pandemic. The US Senate and Trump's administration have not agreed on a stimulus bill that would inject nearly $2 trillion into the economy. Meanwhile, Donald Trump is stepping up pressure on Congress, as the deal is unlikely to pass just by a majority of votes. Experts at most investment banks downgrade their forecasts for the U.S. economic growth. Gross domestic product could slump by a whopping 30%. The Dow Jones shed another 3% as investors took no notice of new stimulus measures launched by the U.S. Fed on Monday. Instead, investors are shifting focus towards the coronavirus statistics. The U.S. is ranked third among the countries with the largest number of infected people. American health authorities warn about a sharp increase of cases in the nearest days. Having hit record lows, the benchmark index measuring performance of the largest U.S. enterprises settled down at 18,591. The US dollar index has retreated from historical peaks, still trading at multi-year highs. On early Tuesday, the index was trading under pressure with a 1% loss from Monday's highs. In the New York trade, the index regained some losses, so it opened the New York trade at 101.6 with a 0.5% loss. On Tuesday, the index is on track to the biggest intraday loss for 3 weeks. Nevertheless, most analysts are betting on the greenback strength. A retracement from 103 does not mean a trend reversal. Perhaps traders are looking in profits that accounts for a decline. Traders expect the index to advance to 105 in the short term. Commodity currencies are still trading under pressure. The Canadian dollar is the worst performer, which is no surprise amid the bear trend in the oil market and the coronavirus pandemic. Today, the dollar versus the Canadian dollar pair climbed above the level of 1.45, even though oil rebounded 5%, retaining intraday gains. A steady recovery of oil prices comes from hopes that the U.S. is about to approve the stimulus package to soften the adverse coronavirus effect and prop up demand for oil. Such expectations will support oil prices, at least in the short term. The question is open whether optimism among energy investors will hold for long. You've watched Financial News on Insta TV with me, Anna Kasatkina. See you back tomorrow.